Hi Team Value, JJ here. Welcome back. Well, today we're looking at super investor Howard Marks, a recent podcast where he talks about the biggest mistake that he thinks investors make. He also talks about market cycles and where we are in the current market cycle as he sees it. This is from a recent podcast by Nordbank. I'll put a link to the whole podcast, long podcast, in the description, but let's just dive into this part of it first.
No, you're very dismissive of economic forecasting, as we talked about, but you are a strong believer in cycles and knowing where we are in the cycle. Why is the understanding of market cycles so important?
Well, the world is cyclical,
He's written a book about market cycles, by the way. I'm going to put a link to that in the description. Really good book where he talks about taking the temperature of the market.
Oh, everybody knows that the market and the economy and politics move cyclically, and nothing moves in a straight line where human behavior is involved. And if you were to count on it doing so, you would get into big trouble. I've been thinking about writing a memo. Lately, people have been asking me, what is the biggest mistake?
His memo is famous, of course, by the way. It's in podcast. I listen to the podcast version. He does it every so often. It's become very well known in the investing community, value investing community, where he talks about various topics, and he has addressed these things over time, the cycles, and he's made predictions very seldom, but the predictions he has made have been right because he doesn't do it very often.
That you've seen, or what is the mistake that people make most often? And I think it is that once the market is moving in one direction, that it will always continue to do so. In truth, regression toward the mean, or the correction of excesses, is much more dependable than continued movement in a straight line.
That's interesting. That movement, regression to the mean, or corrections. What he's talking about is a correction there, where everybody goes with momentum. We can see that in stocks like Nvidia and these big US tech stocks, the mega techs right now. He doesn't talk about that so much, but I see what he means there, that we get excited about the market. We go with momentum when we forget that it can turn. And he is saying it's more dependable, that there is a correction after an excess in the market. So he's talking about fear and greed. People go with greed, and we see it time and time again in the stock market over many years, over generations.
Why do things revert back?
Because I wrote a book in 2018 called Mastering the Market Cycle. And
as I said, I'll put a link to that in this description. It's a really good book. I highly recommend reading that.
Great believer in cycles. I'm a student of cycles. I've lived with cycles for a long time. And yet, when I got about 2/3 of the way through writing the book, I said to myself, why do we have cycles? The economy grows at 2% a year. Why doesn't it just grow 2% every year? Why sometimes 1 and sometimes 3 and sometimes -1?
So what's the answer?
The answer is that people go to excess. And, for example, if the economy is growing well for a few years, business heads say, oh, well, we have to build a new factory to get our increased share of the growth in our industry. And so they do, but so does everybody else. Now there are too many factories, and now the factory utilization falls, and the companies go into decline. So then they pull back, and they stop building factories.
So straight.
That's an example of that I always talk about is during the dot-com bubble, which was, of course, a great period of excess and greed, and a lot of things were pulled forward. A lot of the future was pulled forward there. And what happened there was fiber optic cables were laid, and way more than was needed. There was this future of streaming, video streaming, which we've got now, where, you're watching this through a free service, and we can see things through the internet now in fast broadband. But back then, in the 1990s, a lot of cable was laid that it was too much, and it took a long time to catch up, but it did happen. So that's what he's talking about there. And you can see things happening now. Is it happening with AI, with all the data centers and things needed for AI. Perhaps not. And there was an example of Cisco, but that is one of the examples that I think that he's talking about there, that humans go to excess, and they go to excess in the stock market, of course, with this greed and fear.
Straightforward greed and fear.
Greed and fear is a good way to put it. And, you mentioned the memos. The second memo I wrote, 1991, was called The Pendulum. Greed and fear, optimism and pessimism, credulousness and skepticism.
Now,
Yes, so if you're getting value out of this video so far, do remember to smash that like button to help the algorithm to spread it to more people. And if you're new here, do consider subscribing if you want to get this kind of content more, and hit that notifications bell if you're on YouTube to get notified of when I post new videos.
You dismiss forecasting, yet you are a great believer in or trying to figure out where we are in the cycle. Isn't that kind of counterintuitive?
It sounds it on the face, but I think there is a time when forecasting becomes more useful, and that is when we're at an extreme. Now, think about what I said a minute ago, that the biggest mistake people make is to believe that a process, once in operation, will continue nonstop forever. That's what takes markets to extreme highs, which we call bubbles, and lows, which we call crashes.
And that brings to mind, it's different this time. We're seeing bubbles and exuberance. People say it's different next time. There are always a million reasons for that, why it's different this time.
But when we're extremely high and people get excited and say, hey, this is going to go on forever, usually it will collapse eventually of its own weight. So when the market is crazy high or crazy low, I think we can make a profitable forecast. The only thing is, Nikolai, we don't get too many opportunities.
So he only predicts what's going to happen, what he thinks is going to happen. He only has, through his memos, a few times when it's been really excessive or really low. That's how he thinks that's the only time that you can actually make a solid, dependable prediction.
I was speaking with my son when I was writing that book on cycles, and I said, I think my market forecasts have been about right. He says, yes, Dad, that's because you did it 5 times in 50 years. 5 times the market has been at such an extreme that regression toward the mean has been dependable, not in terms of when it will happen or what will cause it or how fast it'll happen, but the fact that it will.
Where are we now?
I think we're in the middle ground. I think we're a little bit above fair value, but not so high that a decline is predictable or dependable.
So he's saying middle ground, middle of the cycle. So we're seeing this activity with AI-related stocks that's getting excited, but he thinks overall, obviously what he's saying is there that he's not taking the temperature of the market, he's not seeing a lot of excess around. And, if we compare it to in recent times, say 2021, when there was a lot of excitement, there were SPACs, there were meme stocks, there were many things going on, hundreds of SPACs were launched. We're not seeing that kind of activity. So I think I've heard him talk before, and I think that's why he's saying that. He's saying it's not so hot, and he talks about credit being loose or tight, that sort of thing. So that's why he thinks it's kind of middle ground, even though there is this exuberance in AI-related stocks.
Are you talking about credit cycle now or stock market?
No, I'm talking right now about the stock market,
right?
Pretty much. And I'm not involved in the stock market directly. Most of Oaktree's activities are in the credit markets.
Yeah.
But I think the stock market is a good barometer because it's very obvious. We get a reading in the stock market every day. We don't get frequent readings in the credit market, and in private credit, we never get readings. It all takes place behind closed doors. So I take the stock market, and particularly the S&P 500 stock index in the U.S., as a very good indicator of what's going on in psychology.
How many more?
Right, and psychology. So psychology of the market cycles. Now, I do have a new stock channel, Stocks a Day with JJ, which I've been posting daily, reacting to stock news. And I can see this exuberance in the market, and I react to that. And I'm doing this to kind of point out some of the psychology, some of the things that go on a daily basis. Stocks a Day with JJ. I'm going to put a link in the description to that.
More good years do you think we have?
Well, see, now you've crossed the line.
Are we going into prediction now?
But not only that, but you've crossed the line into asking me to make a prediction as to time.
Right.
One of my Oaktree colleagues, in his quarterly letter to his clients, stated his rule: if you name a price, don't name a date. Right. If you name a date, don't name a price.
Yeah.
And
so he's not making any predictions on time, on how long the cycle is going to go for. He doesn't do that. As he said, he takes the temperature of the market at any one time. That's how he does it. And as he said, he uses the stock market to do that, even though he's not fully involved in the stock market as such. Although they have bought stakes in companies, his company, a lot. So not strictly true, but taking the temperature of the market, that's what he does. And as I said, that book's a really good book. Now, if you want to hear more about this kind of thing, I do talk about this kind of thing on the Art of Value Patreon, which I'll leave a link in the description to that. For a reasonable price, I think, every month. I'm currently doing stock analysis videos. I'm going to do about one a week. And I also post an investing update to subscribers every week. Just my thoughts, my extra thoughts, where I don't share anywhere else. So if you want to be involved in that, I'll put a link in the description to that and hopefully see you over there. Now, if you're watching on YouTube, I'm going to put a link on the screen to what YouTube thinks that you want to watch next, what you should watch next. So go and see that now if you want to. And also a subscribe button if you want to subscribe to this to get more of this kind of content. And thanks to everybody for watching or indeed listening wherever you're doing that. And I will see you in the next one.